Welcome, everybody, to another analysis of Tradomics. My name is Dario. This is the episode 9. And in this episode, we're going to retrieve the analysis we recently issued on Apple in March. The episode 3, where we said that Apple was on the knife edge, was a critical analysis because we were waiting for additional information from the market to understand where the stock could go over the mid, but also on the long term. So today is the 21st of April, and the market has given us additional information. So let's find it out what happened. As for the other analysis, we said that this swing was the critical swing from which it started a nearly downward cycle that has a duration between 190 and 338 days, considering a standard duration. Now, the thing is that with the candle of yesterday, so the 19th of April 2024, we broke up the minimum, the swing at $165.24. What does this mean? So from a technical analysis perspective, we broken up a support and that's it. So we can potentially expect a bounce back to the upside or a bounce of that cat. But considering the T cycle analysis and considering that here in this channel we are always talking about time based on cycles, the most important insight of this analysis is that we're gonna have a nearly downward cycle that will be negative, and the extension of its duration will be to the downside, and will be to the downside at least for 190 days and at most for 338 days. Interesting, isn't it? It means that if we now gauge the duration until the candle of yesterday, we have reached 120 days. Therefore, we might expect, as much as you want, a bounce of a dead cat, maybe also considering the earnings, but the let's say the direction is now signed to the downside. It's signed to the downside, and we're gonna update the lows at least until the 29-30 of July 2024. I repeat, we're gonna update the lows until at least the 25 or 30 of July 2024. That's the best case scenario. The worst case scenario is that we're gonna update the lows until the maximum duration of an yearly downward cycle, and the maximum duration is, I have to actually stretch it quite a bit, until 338 days. So it will be even more than February 2025. Here we go. Until the 3rd of March 2025. So be really careful now with the long position and managing investments, because here we have the condition, as well as for Adobe, that despite some bounce back to the upside in regarding the mid, but over the long term, we will update the lows, which means that we might have a situation like this, because now we have the condition to close at T+4 and have another bounce to the upside for a T+4, but then we will go further back down, maybe a bounce to the upside and further back down. We cannot actually now predict at which speed the HFT or high frequency trading will sell their positions, but be careful that from now on the road is to the downside. Levels we can easily trace a Fibonacci retracement. So the first interesting level for a bounce back to the upside will be $171, after $152, and subsequently $139.64. Now, considering also the more on the short term, here we have to update the chart. So first of all, here we have had the indication that this is a T plus 3 months cycle, and this is a T plus 2. So it's as we were supposing, so the analysis was correct, a T plus 2. We were waiting a bounce to the upside to understand whether there was the possibility not to go lower to this swing at $168.39. But I also told in the other analysis that if this was a T plus 3 and this is a T plus 3, then we should have gone lower to this wing, and given that this wing was close to this wing, potentially lower to this wing. So I was also giving you some insights that the situation here on Apple was really, really tricky. Now, this is a T plus 3, this is a T plus 2, this is a negative T plus 3, this is a negative T plus 2, and here the duration of the T plus 2 has reached 20, 29, 30 bars. So here we have already approximately the medium time to what? To expect a bounce back to the upside for the closing of a T plus 4 eventually, because this T, theoretically, this T plus 4 has reached, as we said before, 120 days. So we might have also a bounce to the upside, but after the strength of the first impulse will be will finished, then we will move back to the downside. So the situation for traders is to open the short on the top. So short the tops. Here we have the condition for a T plus 3 upside. And here we put the U. So we have had the first T plus 3. Now we have add a T plus, this is a T plus 1, and then further back to the downside. So eventually we might have a condition where we can start from tomorrow, from Monday, something new. So potentially another T plus 2 or a T plus 3 or a T plus 4. Depends whether if we start a T plus 3 or T plus 4, we should see a little bit more of a push toward the upside. But then be careful, because after we close an upward cycle, then we will go back to the downside. So hope this analysis has given you a lot of information regarding what is going to happen next, or what it's most statistically relevant for the future. We are now in a situation where we might expect something like this. And I repeat, because that is really key, for the best case scenario, we can further update the lows until 190 bars. So until 29 of July should be the last one. And then the first one of the new cycle eventually will be the 190 bars, so 30th of July. Otherwise, worst case scenario, we go to the 2025. So thanks for watching and see you to the next episode.